Good morning, everyone, and thank you so much for joining the NYSARC Trust Services monthly webinar series. We're very excited. The next couple of months, we're going to be offering a three-part series where we're going to dive deep into NYSARC's trust programs, starting with part one, where we talk about a complete overview of all of our different trusts and help you identify when you yourself need a trust, or you're assisting a loved one, or you have a client who may be in need of one of our trust programs. How do you determine which trust is best for their needs? And we'll certainly talk about ways to help guide people through this. And ultimately, we will be your best resource in determining the best fit. Part two, we will take it a step further and talk about the step-by-step instructions to establish a NYSARC community trust. And then part three, we are going to focus on how you access funds in the trust and what you can use the trust to pay for. So thank you guys so much for joining us. Before we jump in, I want to remind you that everybody is muted and we have disabled the chat. So please put any questions that you have into the Q&A section. We will reserve some time at the end of today's webinar to go through those questions and do our best to answer as many as possible. We've enabled closed captioning, so please be sure to turn that on your end if you would like to get closed captioning for today's webinar. And a link to the materials will be sent out tomorrow. There's a notification that will go out via email 24 hours after today's webinar. And Nina is also going to drop that into the chat or QA, so you can download those materials now if you'd like to grab them before tomorrow. We are recording today's session, and it will be available on our website at nysarctrustservices.org/webinars. And you'll also find there recordings of all of our monthly webinars throughout the year. Following today's training, you'll get a brief survey. We ask that you complete that. Take a couple minutes to let us know how we did, how the topic was, and if you learned something new. And just as always, a reminder to everyone that these presentations are for educational purposes, and some of the information may change in the future. So if you're watching this recording after today's date, some of the information may be updated. All right, so before we jump into an overview of our programs, I would like to give just a little background on NYSARC Trust Services. NYSARC Trust Services is a nonprofit organization, and we were established by the Arc of New York in 1972. Now, the Arc of New York is a family-led nonprofit that has been providing services and advocacy to individuals with intellectual and developmental disabilities since 1949. And we really got started as a way to help the parents of the individuals that we support protect their money so that they could leave assets to their loved ones who rely on means-tested government benefits in a way that it would not jeopardize their financial eligibility for those programs. Very soon after, we expanded to be able to allow individuals to protect their own money in a trust, and those are referred to as first-party trusts, where the individual is funding it with their own income or assets. And most recently, we added a third-party pooled trust as well to expand on our third-party options, allowing people with any type of disability to have a parent or a family member fund a trust and have NYSARC be the trustee or administrator of that trust. So in many ways, NYSARC Trust Services has expanded the mission of the Arc of New York because we serve people with any type of disability and really of any age who has a need to protect their financial eligibility for these means-tested benefits. And NYSARC Trust Services serves every county of New York. We specialize in protecting New York-based benefits. So we typically work with individuals who reside in New York State and who receive some form of means-tested benefits in New York, like Medicaid, supplemental security income, and other means-tested benefits. In our 50-year history, we have a lot of knowledge and experience in administering these accounts, and we've had the opportunity to provide services that improve the lives of over 25,000 people. Now, just a little background on supplemental needs trusts before we dive into each of our individual programs. The primary purpose and role of setting up a special needs trust for yourself or for a loved one is to allow them to qualify financially for a means-tested benefit like Medicaid or supplemental security income, or reduce assets that they may have in their name or have available to them, or they may be entitled to receive, so that they can stay below the very strict financial limits for these programs, allowing them to access these services, and the goal being to allow them to live independently in the community in the least restrictive setting possible for as long as possible. Setting up a supplemental needs trust can sometimes be done in advance when we're talking about a third party, a parent or other family member who wants to leave money in the future to a loved one. And when we are setting up a trust with a person's own money, it's often done at the time that they're applying for services or when they're already receiving services and they come into some sum of money that might put them over the limits to keep those benefits. So in many ways, special needs trusts not only preserve benefits for the future, but also in the here and now to make sure that people can keep the services that are so vital to their ability to live independently. And this tool provides a vehicle to allow someone to have more money available to them. Because when you have to keep your income and assets below these strict limits, it can leave you with very little to provide for things that benefits don't cover. And so this can give someone a better quality of life because they have more funds available to them. They also have the ability to save for the future, work without fear of losing benefits, and have money set aside for emergencies and things that they may want or need in the future. Now, I'm not going to spend a lot of time on the limits today because we have a lot to cover on the programs. We've done extensive webinars in previous months about the current income and resource limits for Medicaid and SSI. So we encourage you guys to go back and watch those trainings for more information. But the key here is that when someone receives these government benefits, there are limits that their assets need to stay below a certain amount. For a person receiving SSI, they can never have more than $2,000 in their name or in their bank account. If the person is not receiving SSI, they're only Medicaid, receiving Medicaid waiver services, long-term care services, TBI waiver, OPWDD services, though they're going to have a higher asset limit. And as of this year, they can have up to $30,182. And those limits are slightly higher if they're married and both of the individuals are receiving services from Medicaid or SSI. And you have a need to set up a special needs trust if you are receiving funds from some sort of large windfall often. Something like a settlement, someone left you money directly instead of putting it into a supplemental needs trust. It can also be things just like a retroactive Social Security payment that someone might receive, or money that's just accruing in a person's bank account that needs to be spent down in order to maintain their eligibility for services. Or if you have money that you need to transfer out of your name in order to go and apply to receive these benefits. And in 2023, if you're just getting Medicaid, you also have income limits on a monthly basis for a single individual. Your income must be below $1,697 a month in order to qualify financially for Medicaid services. And again, this is waiver programs, long-term care services. If your income is above those limits and you have a qualifying disability, you can use a supplemental needs trust to reduce your income so that you can access the services, get Medicaid to provide these supports, and have that money still available to you in a trust account to help maintain your standard of living and cover expenses that your Medicaid benefits don't provide. Now, most of NYSARC's trust programs are called pooled trusts, and this is a special type of irrevocable supplemental needs trust. Pooled trusts must be run by nonprofit organizations like NYSARC, and we manage funds on behalf of the individual who's receiving Medicaid or SSI services, known as the trust beneficiary. A pooled trust can be used to protect both income and assets to help protect benefits and supplement the services that a person receives from government benefits. The individual applying to use the trust must have a qualifying disability under the Social Security Administration's definition. And that generally means that they're not able to work for a period of 12 months or more due to some disabling condition. And in some cases, there are individuals who may also be working. As we mentioned on the previous slide here, we have a Medicaid buy-in program where it is a Medicaid program for individuals who are working and still have a disability. So this can certainly vary from individual to individual. If you receive SSI or SSDI, you are already eligible to use a pooled trust. You've gone through that process of being deemed disabled. If you're looking to qualify for Medicaid services, you may need to fill out some forms with the local Medicaid office in order to verify your disability to use a trust in order to protect assets or income. While the funds in the trust are pooled for investment and management purposes, we maintain a separate account for each of the beneficiaries. So the money that the person puts into the account is their money minus any cost of the trust administration that's there for them to use for the items and services that they want to purchase from the trust. The trust administrator will deduct monthly fees from the balance of the trust. So fees are not paid on top of what you're required to deposit, for example, on a monthly basis, if you have a Medicaid spend down, or it's deducted out of the lump sum of funds that you deposit into the account. They don't need to be paid on top of what you're putting into the trust. And one of the key benefits of a pooled trust is that it allows you to protect assets for individuals of any age. So even if a person is over the age of 65, they do have the option of transferring funds into a pooled trust. There are some things to consider depending on the types of benefits that a person's receiving regarding transfer penalties when someone's over 65. So if you're working with somebody over 65, we encourage you to contact us before getting started with an application. And under federal policy, just like any supplemental needs trust, when it's a person's own money funding it, there is a payback provision that upon the death of the beneficiary, if there's money left in the account, it either needs to be retained by the not-for-profit that's administering the account or paid to Medicaid states up to the amount of any outstanding Medicaid liens. So when a person is funding the trust with their own money, upon their death, that money will typically be retained by the nonprofit administering the pooled trust. And we'll talk about some of the exceptions that apply to that. If it's someone else's money where it's funded by a third party, there is not a payback to Medicaid or not a requirement to repay Medicaid. I do see that we have a hand raised. Everybody is muted by default, so please put any questions you have into the Q&A, and we will be happy to respond to those at the end of today's session. So a lot of people will ask, why use a trust? When do you use a pooled trust? When is a NYSARC community trust a good fit? Some of the key benefits of a pooled trust or a NYSARC community trust is that it's very quick and easy to establish. So if you have someone who needs to protect benefits and they need to get money transferred quickly, it can be a great option. The documents have already been drafted and approved by Medicaid or SSI. So as an attorney, you don't need to draft any documents. Your client is certainly simply applying to join an existing and approved program. You can also open an account with as little as $300. So this makes it very accessible to someone, no matter the size of funding that they may have a need to protect. And generally, when you compare the administration costs of a pooled trust compared to a financial institution or a corporate trustee, the cost to set up the trust and maintain it over time is generally lower. So it can be a great option when someone's only receiving a nominal amount of money, but also very accessible to someone for any size of money. We do have very low minimum funding requirements, which again means that if you're receiving only $10,000, to go to an attorney and draft your own supplemental needs trust, it may cost a lot of that $10,000 and leave the person with very little left in their trust. So it can be a great option in those instances. What is really most frequently used for is when you really don't have an appropriate person to serve as the trustee of the trust, or you're looking for the support of a professional trustee. NYSARC community trust programs are run by a nonprofit organization that has 50 years of experience protecting people's financial eligibility for government benefits. We know the rules of benefits, and we're keeping up to date on those over time. We also have a financial institution that serves as the co-trustee to manage financial investments of the trust, and they have over 190 years of fiduciary and wealth management experience. So in many ways, you really get the best of both worlds, where you have a nonprofit trust administrator, you get the personalized service of working with people day to day who have experience in understanding the needs of people with disabilities. And you also have a very experienced financial institution providing support with investment management. So you really get that full package in one place, where if you're going out and drafting your own trust, you may have to piece that together and find resources that will help provide all of that support. Let's talk a little bit more about what our role is and what we do as the trustee of these trusts. So NYSARC community trusts are overseen by a management board of trustees. We have a group of 9 individuals who are leaders and experts in their space and who volunteer their time and expertise to oversee the day-to-day operations of the trust. And NYSARC Trust Services, as the nonprofit, manages day-to-day communication with the beneficiaries. It's our fiduciary duty to act in the best interests of our beneficiaries when making decisions about the use of funds in the trust, so that we're making appropriate distributions that are going to improve that person's quality of life, while also considering how the impact of those distributions could have on that person's financial eligibility for benefits. So our key role is to manage the funds in the trust on behalf of the individuals that we serve, to make sure that that money is used appropriately for them and for things that are going to improve their quality of life, while considering how any distributions could reduce or impact financial eligibility for benefits as it pertains to the transactions coming in and out of the trust. We're also responsible for keeping detailed documentation of the things that we're using the trust to pay for and reporting to government agencies as requested or as needed. And that's one of the great benefits of sometimes individuals may want to, family members may want to serve as the trustee of the trust. Handling all of these duties can be a lot of work if you are not experienced in government benefits, or if you have other responsibilities like your own job or managing families, things like that. So our program really gives families a way to be advocates for their loved ones and participants in the trust process, but not have to take on the legal responsibility of serving as the trustee and maintaining all of these documents. You provide it to NYSARC, we hold on to it, we digitally document things, and we have that for you when you need it to report to any government agencies. And as we mentioned, we have a financial institution that serves as the co-trustee, who is constantly reviewing and updating our investment strategy to support the needs and goals of our beneficiaries. And they follow the Prudent Investor Act to ensure that we're making sound financial decisions with the funds in the trust to help that money last as long as we can to improve the lives of the individuals we serve. And we will also handle any tax preparation for the trust as well. That is done once a year. And as we go through the different programs, you'll see that's a cost that is paid by the beneficiaries annually. So now I'm going to dive into our specific programs and walk through each of our community trusts, starting with our most popular program, This is the program that most individuals that we serve use, and it is to help someone spend down their income in order to qualify financially for Medicaid benefits. Community Trust 2 can be established with a minimum of $300, and it's primarily used by people who are receiving Medicaid services and struggling to pay their spend down, or who just don't have enough medical expenses to meet the spend down requirement. Can also be someone who's receiving Social Security disability income, where that Social Security disability is just above the Medicaid limits, and they need to spend down funds in order to access those services. And really, primarily in New York State, this program is used by older adults when they have a need for home care services. Many older adults have too much income to qualify for Medicaid, but not enough income and resources to be able to financially support years of long-term care services, because home care services can be so expensive. So this is a way for older adults to access Medicaid services, even though their income may be above those limits. And that would be a group of people who may need to fill out some paperwork with Medicaid in order to be formally deemed disabled and use a pooled trust to meet that spend down. This trust is funded with a person's income, and that income is determined by Medicaid. Medicaid will tell them the exact amount that needs to be deposited into the trust each month. As I mentioned, it's primarily used to help someone qualify for community-based Medicaid health benefits, like waiver services, waiver programs, and also home and community-based services like home care, or even in some cases, an assisted living. We do ask that individuals keep a minimum of $100 in this account because these are pooled trusts. A person is generally depositing their income in and using it in that same month in order to pay bills that are going to allow them to live independently for as long as possible. The goal of this program is to help people not have to impoverish themselves in order to access Medicaid services. So by putting their excess income into the trust, they can pay things like their rent or their mortgage, utility bills, things that are going to allow them to maintain their standard of living and live at home with comfort and dignity for as long as possible. They're able to leverage services like electronic deposits into the trust every month, and we encourage setting up automatic payments for bills that are the same amount each month to try and make this process of using the trust simple and easy. And we offer a variety of tools to help people manage the trust. We have an excellent customer service team that's available weekdays 8:30 to 5 to assist our beneficiaries in setting up payments, as well as helping them determine what's the best use of funds in the trust. And after hours, they can access information about their account through our online portal, as well as an automated phone system where you can call in and get a recording of your recent transactions. So if you have a client or you yourself have a need to spend down income in order to access Medicaid services, you're generally going to be a good fit for Community Trust 2. And because you need this money each month to pay your bills, this particular trust, we generally hold the funds in the account in just like an interest-bearing bank account. The funds are not invested because the individual is going to need to access them month to month to pay bills. And just a quick overview of the fee structure for Community Trust 2. So as I mentioned, the minimum opening deposit, you have to establish the account with at least $300. That allows us to deduct the one-time non-refundable enrollment fee of $200 that can come out of your $300 opening deposit. Or if you already know what your spend down is, you can open with your spend down deposit as long as it's greater than $300, and we'll simply deduct the $200 enrollment fee from your initial deposit. Does not need to be paid on top of your spend down. And monthly fees are going to be based on the amount that you're depositing into the trust each month. So we have a sliding scale that starts at $30 a month. Most of our fee brackets are going to be less than 10% of the spend down. So you'll find that NYSARC Trust Services is the fees for NYSARC spend down program are generally lower than most other trusts, with a few exceptions. And then we have some nominal bank fees that come out for the financial institution to manage the trust and make payments out of the trust. They're helping to facilitate the payments to vendors. And so that is, those are fees that typically amount to a couple dollars, depending on how much money you're keeping in the account, because it's based on the balance that you have at the end of the prior month. So generally, when people are using this trust, they're depositing their spend down in, and they're paying that out in bills. They should mostly just have the $100 minimum that's required for them to keep in the account. And so that would result in very low bank fees. And those fees could adjust if you have a slightly higher balance that you're keeping in the account from month to month. And as I mentioned earlier, each year we do an annual tax preparation for the trust, which is required. And something that we choose to do is we have an independent CPA firm come in and audit our operations. And so that is a charge that each beneficiary will incur once a year. It's generally deducted from their trust account in the month of July. And it's important to note that these fees cover all trust activity with NYSARC Trust Services. There's no limit on the number of requests you can send in every month. It gives you access to our full suite of services, including electronic deposits, automatic payments, access to the online portal, and our customer service team and other services. And we charge no annual renewal fees. But these are some of the things that you may see in other programs, and you want to be sure that you have a full understanding of the costs of the trust. We certainly do our best to keep our fees as low as we can, so that people have more money available to them in their trust to pay bills each month. And I put a link here, not only to our fee schedule, but also to a page on our website where we have a nice little calculator where you can plop in your spend down amount, and it will calculate for you a detailed breakdown of your approximate monthly fees. So that can be a great tool to use if you want to determine, monthly, the approximate amount of fees that would be coming out of the account. That will help you understand about what you have available to use to pay bills or make distributions from the trust. For individuals that are receiving government benefits and have a windfall of money coming in, or just money building up in their bank account that might put them over the $2,000 resource limit for SSI, those individuals are generally going to use Community Trust 1. And we also have a Community Trust 3 for someone that has a higher sum of assets that needs to be spent down. So our Community Trust 1 program, like Community Trust 2, has a $300 minimum opening deposit. So again, makes it very accessible to somebody who may be receiving $10,000 and needs to set up a trust quickly. These programs are generally used when someone is getting SSI, supplemental security income benefits, and or Medicaid services, and has money in their name, or that they are intending to, they may be receiving or are entitled to receive, that's going to put them over those financial limits for those programs. Now, it's important to point out that either Community Trust 1 or Community Trust 2 can protect both income and resources. And so we often have people who start out with a spend down and are using the trust for monthly deposits, and then come into a windfall of money that may need to also be deposited into a trust. And vice versa, where they start with a lump sum and later on they have a need to make monthly deposits. So know that when you have someone in that situation, deciding which one of the programs is the best fit for them is dependent on a number of factors. How old is that person? What benefits are they receiving? And how significant is the lump sum? Is it enough that it makes sense that we would want to have it in a vehicle where it could be invested, like Community Trust 1? And so those are conversations that you will really have to have with our team. And we're certainly happy to help guide people to the program that makes the most sense for them in those situations. Community Trust 1 can be funded with a lump sum or structured payments as well. And some of the unique differences about Community Trust 1 and 3 compared to Community Trust 2 is, as I mentioned, this is often a larger sum of money that would be invested, which means that it's subject to market fluctuations throughout the year. And each beneficiary in the pooled trust will own a pro rata share of the investments. With Community Trust 3, it's going to be a little bit different. Community Trust 3, the individual is going to have their own bank account. It's a much larger sum of money. Community Trust 3 is funded with a minimum of $250,000. And so that program, that individual is going to have their own account, and those funds would be invested individually. Because these are first-party trusts, meaning it's the person's own money funding the trust, there's going to be a Medicaid payback provision upon the death of the beneficiary. With Community Trust 1, we typically retain the majority of the funds in the account, whereas with Community Trust 3, we have a little bit of a different structure, and there is a potential for some of that money to go to remainder beneficiaries, and I'll talk about that in more detail in a couple slides. So for Community Trust 1, similar to Community Trust 2, $200 one-time enrollment fee deducted out of that initial deposit. So if you have $50,000 that needs to be put into a Community Trust 1 account to maintain Medicaid or SSI benefits, we'll deduct the $200 enrollment fee directly out of that. In some cases, the person may want to set up the trust to have it ready to receive funds, and you can do that by funding it with $300. And in some cases, we may even be able to open it unfunded while waiting for those funds to come in from an insurance settlement, for example, or payment out of a life insurance policy. The monthly fees are going to be based on the balance at the end of the prior month, and it is a percentage of that balance with a minimum monthly fee of at least $20. Bank fees are going to be the same across all of these programs. And so that is for the investment management of the assets in the trust. Bank fees in this program will be a little bit higher than with Community Trust 2, because generally these individuals are maintaining a larger balance in their account. And just like our other programs, we have an annual tax and audit fee. There is a separate fee schedule if the person is making monthly deposits in addition to having a lump sum in the trust. So I'll refer you guys to that fee schedule. It's very similar to Community Trust 2, and it's essentially the greater of those two fee structures. Again, if you have questions about that, we encourage you to review the fee schedules, use the fee calculator we have on our website, and contact us if you have any questions. Community Trust 3, because it is a larger initial deposit of over $250,000, the structure is a little bit different. There's a $500 one-time enrollment fee, again, deducted out of the initial deposit. Monthly fees for the administrative services of NYSARC are slightly lower when the balance is over $150,000. And then that fee will increase once the balance gets below $150,000. So again, we refer you to the current fee schedule for any questions you have on that. Same bank fees across all programs, and once a year, they will incur an annual tax and audit fee. Now, the key difference with Community Trust 3 is because the individual is funding the trust with more significant assets, there is a potential that NYSARC would be able to repay a person's Medicaid lien at the time of death. So when a beneficiary dies in this program, we look at the balance in the trust. If it's not enough to pay off the full amount of someone's Medicaid liens, then NYSARC would retain all of the funds. But if the balance can pay the Medicaid liens in full, we will satisfy any outstanding Medicaid liens, and NYSARC will only retain 25% before the rest would be distributed to remaindermen as noted in the joinder agreement. So it works a little bit more like an individual standalone special needs trust, with a small retention from NYSARC in the event that we are able to pay the Medicaid lien. Now, our third-party trust program, so that concludes our first-party trusts. We now have a new third-party pooled trust And as I mentioned earlier, this program has allowed us to expand to offer third-party trusts to people with any type of disability. And it's very accessible to families who are looking to set aside some money for their loved one who relies on these benefits, because this can be funded with a minimum of $10,000. I often speak with families and they'll say, oh, we don't have a lot of money. We don't have a lot of assets. We're not the right fit for a trust. Any person that has an individual with a disability in their family where leaving any amount of money could cause them to lose eligibility for these benefits should be considering setting up some form of trust, because even a life insurance policy, proceeds from a life insurance policy, receiving that money could put someone over the limits. Inheriting a home that then needs to be sold and they receive the proceeds from the sale of that home could kick them off benefits. So it's very important to be thinking about this when you're considering options and plans for the future needs of your loved one with a disability. And one of the great benefits to this program as well is that you don't have to fund it today with $10,000. It can be set up because there is a joinder agreement that needs to be executed in order to establish the account. And you don't need to fund it. You can name it in your will and estate planning documents, and it can be funded upon your death. You just simply need to pay an enrollment fee to join the program and $50 a year to maintain that account until the time that the account is funded. This program is generally set up by a parent or other family member. Any third party, could even be a trust, and a revocable trust that has a clause in it to, if someone in that trust is intended to get funds who may need government benefits, that it would go to the NYSARC third-party community trust for the benefit of that person. So often, most commonly, this is named as the recipient of a person's inheritance, life insurance policy, generally funded upon the death of the donor. The donor does need to complete a joinder agreement during their lifetime prior to putting it in their estate plan, or they need to authorize someone to execute that on their behalf. Definitely, we advise and suggest setting it up during your lifetime, because then you can provide information about your wants and needs, and also you're able to name remainder beneficiaries of the trust in that joinder agreement. We strongly encourage anyone thinking about setting up a third-party community trust to consult with not only a legal professional, but also a tax professional to understand how to do that appropriately and make sure that it meets state guidelines. The third-party community trust has a one-time enrollment fee of $750 to set that up. So again, very accessible for families who may be looking to set up a trust and want a professional administrator to oversee those funds. The monthly administrative fees for NYSARC services are 1.5% annually, and it's charged at a monthly rate of 0.125%. Again, bank fees are going to be the same across all of our programs. So collectively, between the bank and our services, the annual fee for this trust is about 2.25%. We also handle the annual tax preparation as for all programs, and that is charged to the account once a year. And because this is a third-party trust, meaning it's funded with someone else's money, someone other than the person receiving benefits, there is no requirement for us to repay Medicaid with the money in the account. So upon the death of the beneficiary, the donor will name in the joinder agreement who they would like any of that money to go to, and we will distribute the balance of the trust according to those donors' wishes. NYSARC Unrestricted Fund is our original trust program, is the trust that we established in 1972. And this is a very mission-driven program. And so this is a trust that's funded by a parent or other third party for the benefit of a person with an intellectual or developmental disability. So this is one of the only trusts that we have that has a specific eligibility based on disability. This trust can be established with a minimum of $25,000, And again, like our third-party pool trust, it can either be set up during a person's lifetime and funded today, or set up as a testamentary trust to receive the proceeds from someone's estate or inheritance that someone is entitled to upon the death of the donor. If you're setting it up during your lifetime, it requires a trust agreement to be drafted by an attorney, and our team would need to work with that legal professional to review and approve that document. If it's being, if the intent is to fund it upon the death of the donor, then we can work directly with your attorney to make sure that the trust is properly named within your will and other estate planning documents. And at the time of your death, that will become the trust document that governs the unrestricted fund. There's also a service agreement on our website, which gives you a good overview of the structure of this trust, and the information and procedures document, which can walk you through the different policies and procedures for this particular account. One of the unique benefits of the unrestricted fund is that we charge no cost. There is no cost to set up the account, and there are no administrative fees charged by NYSARC Trust Services during the lifetime of that beneficiary. So for this particular program, the only costs for the individual would be the monthly bank fees that come out of the trust and are deducted from the balance that's in the trust. Like all of our programs, we handle that annual tax preparation, and that will be charged once a year in July. And upon the death of the beneficiary for this particular program, NYSARC will retain the first $25,000 in the account, and any balance left would go to remainderment as named in the trust document or estate planning documents of the donor. If there is no money in the trust upon the death of the beneficiary, NYSARC will get nothing. And so we retain up to $25,000. This is a complete overview of all of the trust programs that we just discussed, with some of the key points: who it would be funded by, first party or third party, the type of trust, what the minimum opening deposit is, the cost to set it up, those monthly fees, and what happens to the money in the trust upon the death of the beneficiary. So we encourage you to use this as a resource, and there's a link to it on our website as well if you have questions in the future. And beyond that, we provide a lot of resources on our website. There are a number of answers to frequently asked questions, helpful articles, previously presented webinars that we encourage you to watch. And we recently launched a new website where we now have a tool on our trust page, which is an overview of all of our trust services. And it gives you options to select who you are and what you need help with to direct you to the appropriate trust for your needs. Now, again, in some cases, it's a little bit more complicated, not so straightforward. And so it may direct you to just contact us to talk about next steps. But we encourage you to use this tool if you have questions about what trust is the right fit for you or your client, and certainly contact us for more information. Now, I'm going to open things up to Q&A, but just a reminder to everyone that part 2 of this series will be talking about how you establish one of these trusts. Now that you've determined that someone is a good fit for one of our programs, what are the next steps to open up the trust and be sure that that establishment of the trust is communicated to the appropriate agencies? So we hope to see you on Thursday, October 12th from 9:30 to 10:30. There's a link here to register. And you can also access the links to register for all 3 of these programs directly from the homepage of our website at nysarctrustservices.org.